Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you're new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating and review. This content is brought to you by Uphold, which is a great platform that makes it easy to buy, sell, trade, and earn cryptocurrencies. Uphold is one of the leading exchanges. I've been using them since 2017. They have 10 plus million users, 200 plus cryptocurrencies, and they're available in 150 countries. If you would like to learn more, please visit the link in the description. All right, my friends, we got some big institutional crypto news. The institutional adoption of crypto continues. They're building, they're integrating, they're acquiring companies. So first up is Fidelity. So the news reported by CNBC today is Fidelity to open commission-free crypto trading to retail investors. So signaling they are not only catering to institutions, but also to retail. And this is a great incentive to bring a lot of retail on board, right? We're having business competition here, game theory playing out, and absolutely makes sense. What I love about this, though, it's going to add more competition to the market, especially when you have, a lot of exchanges who were started up in the crypto boom, and you have these traditional financial players coming in. More competition is good for the consumer. You often get lower fees, better service, because everybody is competing to try to take market share, to try to get the customers. And in order to do that, you have to have great service. You have to look at your incentives, and sometimes it could be commission-free trading and all kinds of perks and incentives. So this is good for all of us who are in crypto and for the new folks who will be coming in. So the firm, one of the largest brokerages in the world, handling $9.9 trillion in assets, opened an early access waitlist to users Thursday morning. The service, called Fidelity Crypto, will allow users to buy and sell Bitcoin and Ether and use custodial and trading services provided by its subsidiary Fidelity Digital Assets. Users will be required to maintain a $1 account minimum. Here's a quote: "Where our customers invest matters more than ever," Fidelity said in a statement shared with CNBC. A meaningful portion of Fidelity customers are already interested in and own crypto. We are providing them with tools to support their choice so they can benefit from Fidelity's education, research, and technology. While trades with Fidelity Crypto will be free of commission fees, the firm says it will factor in a 1% spread into every trade execution price. Now, that's kind of the catch there, right? Where they have that 1% spread. But look, at the end of the day, this is all great news for the adoption of crypto. And look at the coverage it's getting, right? You have a very trusted name, and they're launching all types of crypto services. So Fidelity follows Robinhood and Binance US in offering commission-free crypto trading. The reveal comes at a time when investors are questioning the ability of Coinbase and other exchanges like it to generate revenue. Historically, they have leaned on trading fees for revenue, but fee-free trading in crypto has become an increasing inevitability. Now, it is the bear market, and these are businesses so they're trying to bring in new customers and monetize and make and generate revenue, right? In the bull market, you'll probably see less of this, of commission free, but it's the bear market, and they're trying to win over customers in preparation for that bull market. And don't get me wrong, the customers that come on board, they want them to stay there and to continue to trade and do different things. Oftentimes, the commission free is on a specific asset like Bitcoin, or it's for a limited time. So this is not going to be something that's going to go ongoing forever, right? They have to make money as businesses, but nevertheless, great news. And just a reminder, in October, Fidelity also announced Ethereum custody for institutional clients. So they're all in, they're building, launching services. Almost every month, we're seeing something new being released. Now, speaking of institutions, digital asset platform Bakkt set to acquire Apex Crypto for $200 million. The company said the acquisition is expected to diversify and bolster Bakkt's revenue as it scales its offerings. For those of you who don't know what Bakkt is or who they are, They are owned by the Intercontinental Exchange, which owns the New York Stock Exchange. Big time players behind Bakkt, big time resources, money, and political influence. They kind of got set back due to the pandemic. They were supposed to do a partnership with Starbucks. Also, the wife of the owner of the New York Stock Exchange, she was having some political problems. She was in Georgia, and it was during the time of President Trump. So there was a lot of problems there. So they kind of hit the brakes on a few things. And I think it was smart, right, not to get the backlash or the connections to what was happening there. So nevertheless, they are ramping up. And look at this acquisition, $200 million. And once again, this is the type of news as investors you want to pay attention to and look at. It shows they see that the market's going to grow. It's here to stay. And they're taking lots of money, millions into the billions, doing M&A, mergers and acquisitions, doing a lot of investing and expansion and hiring people. They wouldn't be doing that if they didn't see that a bull market will be coming on the horizon and further adoption of crypto will take place, leading to more revenue, right? At the end of the day, this is simple economics. These are businesses and they have to make a profit. So digital asset platform Bakkt has entered an agreement to acquire Apex Crypto LLC from Apex Fintech Solutions Incorporating. According to the agreement, Bakkt is expected to acquire Apex Crypto for the price tag of $200 million, making its first payment of $55 million at the closing of the deal. The transaction will likely be completed by the first half of 2023 and is subject to regulatory approvals. Launched in 2019, Apex Crypto is a turnkey platform dedicated to integrated crypto trading, built with the intention of meeting the increasing demands of more than 30 fintech firms and their growing customers. Apex Crypto was essentially built to allow investors to transition between trading equities and cryptocurrency by offering efficient account opening and funding solutions, while handling complex crypto-related regulatory and licensing obligations. Very bullish news, my friends. This is a big acquisition if you understand what Bakkt is trying to do and who's behind it. Now, speaking of big, MSCI enlists Goldman Sachs to organize crypto market chaos. Coinmetrics joins financial services giants in defining digital asset categories for investors looking to navigate the space. All, as I've said for years, all the white glove service, the analytics, the data, the reporting, the hand-holding service are being built for crypto that exists in the traditional financial world are being built for crypto. That is bullish news, my friends. They're setting up shop, all the traditional financial players, banks, stock exchanges, credit card companies, payment companies, and so forth. So the New York-based company is set to offer 2 indexes that seek to capture the performance of the top 20 or 30 digital assets by market capitalization, respectfully excluding stablecoins. It also revealed the launch of a digital assets index excluding tokens that rely on proof-of-work consensus mechanisms such as Bitcoin. That's key right there. That right there we got to watch because of the ESG concerns, energy debates that are happening. I hold Bitcoin in my portfolio. I think Bitcoin's here to stay, but the debate around energy is still it's not dying down. It's going to be something that continues. So the Ethereum blockchain transitioned from proof of work to proof of stake in September. Industry watchers told Blockworks that the staking yields investors can now earn from Ether is poised to attract institutions. So institutions will be holding proof of stake tokens, and I hold quite a few. That's one way that I earn passive income in the bear market. Ethereum, I'm staking some of that. Algorand, Cardano, Tezos, and a few others. So something you want to look into. Not financial investment advice. Do your own research, but something to look into. A fourth index targets digital assets associated with smart contract platforms. Here's a quote. The digital assets ecosystem is evolving rapidly along with investor demand for tools and solutions to help navigate this new asset class. Stefan Matatia, MSCI's head of thematic indexes, said in a statement. Here's another quote. Global investors are looking for greater transparency and insight into these markets and how best to participate in them. in a manner that meets their high standards for professionalism, scale, risk management, and security. There you go. The traditional financial services, right? The white glove service, all the guardrails, the security, the insurance, all that, it's coming to crypto. Makes me very, very bullish. So MSCI is the owner and sole administrator of a new classification system. Goldman Sachs and Coinmetrics are the initial autonomy advisory board members, while other members will be revealed later on, according to MSCI. Guys, some of the largest companies getting involved here. Very, very big news. Now, Mastercard, they've been doing a lot with crypto. Just recently, they partnered with Paxos to offer banks the ability to, provide crypto trading to their clients. Well, here we got news that they have added 7 startups to their crypto accelerator aimed at making crypto more accessible. So they continue to fund and innovate with other smaller companies while building their own thing as well. And some of the names on here is Digital Treasure Center, which is based out of Singapore, Facet, which is out of Abu Dhabi, Loot Bolt, which is in the United States, Quadrata, it's in the United States, Stable, which is in Colombia, TBTM, which is Take Back the Mic Studios, is in Dubai, and Uptop, which is in US. So lots of startups, a lot of different crypto companies, and Mastercard investing, working along these folks to innovate and also building their own crypto services. Now, we've been covering the SEC Ripple lawsuit. Obviously, all eyes on this lawsuit because the outcome will determine what happens to the altcoins in the market. Bitcoin has the non-security title already, and we have a lot of amicus briefs being filed on behalf of Ripple. The industry is waking up that, Gary Gensler and the SEC's attack against Ripple was an attack against the entire crypto market. Well, so far, we've got like 12 amicus briefs that came in, and Stuart Alderati, general counsel at Ripple, and Brad Garlinghouse, CEO of Ripple, both tweeted out about this. They said a dozen independent voices, companies, developers, exchanges, public interest, and trades associations, retail holders, all filing in the SEC versus Ripple to explain how dangerously wrong the SEC is. The SEC's response, ? We need more time, not to listen or engage, but to blindly bulldoze on. And Brad said, for those of you keeping count, 12 amici briefs submitted. It's unprecedented, I'm told, to have this happen at this stage. They each explain in their own unique way the irreparable harm the SEC will do to every facet of the US crypto economy if it gets its way. Absolutely. We need Ripple to win. It's not just about XRP, and I think a lot of the industry is waking up to it. Coinbase file and amicus brief, and obviously you have the Grayscale lawsuit happening as well. Anyway, guys, that's the news. A lot of big names: Fidelity, Goldman Sachs, Bakkt, and so forth. Very bullish news. I hope you are paying attention to what's happening and you're dollar cost averaging and being patient and having a macro outlook. The bull market will return. Will you be prepared? Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.